Hey guys, Novice Unicorn here. I am a total novice. I know nothing about stock trading or equities or markets or, clicking buy or sell. I just don't know anything about that stuff. So just take this as my opinion. And I wanted to put together. I apologize. First off for my voice. I'm a little rash. Right now I'm a little froggy. But I just felt like putting together a quick little video on a strategy that I've been working with for the last 4 or 5 months, and it's a strategy that's been working fairly well. I don't think I've actually ever lost money on this strategy, and I'm still messing with the nuances of it. And it's kind of this is a strategy that I built as a kind of like a safety. It's kind of like the what do I trade, um, with the lowest risk level. And I think a lot of new players, and now I mean, I wish somebody had showed me this a year and a half ago when I first started trading. And this is my own system. It's my own little nuance, but it's pretty strong. And you're not going to see it in a day trading video. You're not going to see it in a swing video. You're not going to see it in a freaking market maker video. But it's it's fairly strong, um, and it's based on waiting for the market to forget something is good, and they usually do. And so the key is to find something that's good, and then wait for the market to forget that it's good. And when they forget, you make money. So first off, I'm just gonna go through like this is just one strategy that I use, and it's one I'm working on and developing, and it's very good. It's very good, and I can show you all my trades on this. I will show you key trades and active trades that I have on this strategy. So hopefully there's not a major player out there with $100 million that's willing to short against this strategy, because I would hate you at that point. I doubt you're gonna win, and so the idea being is that I've realized that there are two things the market loves. Two things the market absolutely loves: raised guidance and beating EPS and revenues on their current earnings. But at the same, I mean, that is the golden standard of growth and the golden standard of where major funds want to put their money. And if you don't know about growth and value is where people put money if they want to make money on dividends for 3, 4, 5 years, whatever. The stock's not going to move that much, but it's safer because it's not going to move that much, and you're basically you're buying value. You're going to buy the dividend. You're buying their repatriated funds, so to speak. Growth, i.e., Facebook, Amazon, uh, Google, Apple, a lot of mid-cap stocks. Investors are buying those because of the growth potential of the stock. They're not buying it because it's returning heavy revenues and money based on dividends. The easiest way to tell is when you look at a stock, for instance, these little E's are earnings days. You will look at the stock and you will see no D's, so there's no dividends. A key sign that something is a growth stock versus a value stock. But I mean, that's just a brief overview. The point being is that there's nothing that a growth stock can provide that is better than than a buyout. Other is beating their current EPS, earnings per share, and their current revenue, and on their earnings, raising their guidance for the next quarter, whether it be guidance on EPS or revs, whatever. And the market tends to forget about these things. But this strategy requires patience. And patience is key in the market. Big players have patience. That is probably the number one deciding factor between a key player, a major player, and a novice. like myself, is the level of patience. And patience is usually attributed to the amount of capital involved. If you have more capital, you can definitely have more patience. So, that being said, here is the strategy. And I'm just going to walk down kind of like what I kind of go through on. This is very brief, but the major factors are you want to find stocks that on their current earnings, which is this is the earnings day. I did not own the stock on the earnings pop because I usually don't hold the earnings because it's too volatile. I mean, this could have traded the opposite direction. Instead of ending up here, it could have ended up here. And to me, that's not really a good bet. I mean, unless you're really confident, it's not a good bet. You know, a 20% swing either direction is not. I mean, that's not something I'm really wanting to make money on. I want to make real money. I want to make sure money. And this is I used to play the swing, but right now I play the sure money. And so what you want to do is you want to find strong stocks in strong sectors, and eventually stocks that get forgotten about. For instance, how do we find those stocks? Well, there's a couple different ways, but the basic breakdown is that most of the stocks movement is based on total market. Then it's based on sector, and then it's based on its current fundamentals or news. Okay, so it's market, sector, news, or fundamentals, or we'll just say individual. So market, sector, individual. So a lot of people play stocks and don't realize that it's a market and sector that's moving it. A lot of people say, "Oh, sector." They don't realize how to play those. The key is to find good stocks that get pushed heavily by the market or sector that shouldn't have been pushed, and that's where you make money. So finding good opportunities for that. You always want to look. Everybody dreads earnings season. Well, a lot of people dread earnings season, but you want to look for earnings season. Watch earnings. Look for good stocks, and look for their earnings. You can look here. I set this for guidance up on stocknews.com. I'm not getting paid by them or whatever. It's just one place I go. MU. If you want a good example, just go look at their dang stock. Look at their chart. And you can go through, you can go different places, but what the idea is that you want to see a guidance up in revenues or guidance up in EPS, preferably both. And a lot of times, so what happens is, this is really crude, but let's say that you have your timeline, and every 3 months you're going to get earnings. Okay? Every 3 months you're going to get earnings. Well, they're going to release earnings, and they're going to set a guidance in the EPS or whatever. A lot of times, we'll just draw this in blue. The quarter is already further along because they don't release earnings the exact day the quarter ends. Okay, and I'm not exactly sure how they time this, if it's alphabetical or whatever, or who knows what, but the earnings are, Alcoa is usually the first one to start the earnings season, but some stocks start their earnings, they'll report closer to the actual beginning of the new quarter, and some stocks will end up closer to the end of the current quarter. So this earnings is reporting on the last quarter, and they're going to show guidance and whatever for this next quarter, coming up, this one. And so I know this is totally ghetto, but just follow this. So if they are reporting, say here, and they're reporting guidance and on EPS and revs on the next quarter, they kind of already have this quarter already booked in. They kind of already know. So when they say, "Hey, we're going to beat on the next quarter," they've already basically, they are more sure of their guidance. those stocks will pop extremely hard. If they're closer to the beginning of the last quarter, those stocks they may not pop nearly as much because something bad could happen through this time frame. Something bad could happen, which would make the next quarter like trash. And that is my ghetto bitmap fry. But that being said, there's a sweet spot in here of stocks, companies that report near enough to the end that they already know they're going to beat, but close enough to the beginning that they're not the price isn't totally baked in, so to speak. But that's kind of a caveat. The main point is that when they are raising guidance at EPS, it's generally fairly accurate. They're not going to raise guidance at EPS and miss. That would be devastating. I mean, I'm not saying they can't, but generally they don't want to do that. So, if they're raising EPS in their guidance on revs, they already have a good perspective. And so what happens is you want to find those stocks that beat or raise guidance. Revenue, you want to beat and guidance raise. You want that. If you want to win in the market as a new player, look for that. Don't try to find, they got this great product, it's going to come out in 2 years, blah, blah, blah. Find a company that beats and raises guidance. That's it. That's it. Don't look for anything else. And you can turn them into winners. How do you turn them into winners? You can also look at in play, every day, just kind of scroll through all this stuff and see who raises and whatever on the guidance. I mean, there's a bunch of different places you can go for that information. Then you want to figure out what's the sector doing, blah, blah, blah. An interesting site is Hashel.org. And you can kind of see where the total bullish signals. I'm not vetting any of these sites. You can kind of go through and see like, okay, what's hot. Okay, well, healthcare went off the hook today because the healthcare bill. The next in place is material. Well, yeah, IT, which the thing's always a growth area. Financials. You can kind of look through there and then kind of figure, which space in there is, kind of showing some good things. And their metrics are different depending. I mean, they're looking for like 50 DMA crosses, volume, kind of stuff like that. That's one area. So once you find a sector that seems pretty good, you find a good EPS beat, a good guidance raise, you can look at tip ranks or something like that, get some analyst information. Let's see, on. We'll just do on for now. You can, by tip ranks is pretty sweet. So I'm not going to argue with tip ranks. They're pretty sweet. But you can kind of see like where. So this is on semi. Well, semiconductor sector is pretty hot right now. When I mean hot, they have large demand and they're very, very they're minorly impacted by politics, which is really good. So, and you can find some analyst rankings and stuff like that, and see where they want to go with it. So they're saying this thing's probably worth $17.86. It's at $15 right now. $17.86 is a bit of ways away. And they're not right. They're not always right. But the point is, you can get a little bit. The one thing is that when you have a large number of analysts that are covering something within a small period of time, the chart means people are kind of looking at it. So that's good. So you found a stock that's beat and raised. You found a sector that's fairly good. You found some analyst opinion that seems fairly positive, even though the stock is kind of down. And then you need to look at total market, because that is the number one mover of all stocks. And while this is a NASDAQ stock, you can kind of look here. This is kind of late at night, so the futures are already trading for next day. Futures are up. I'm going to make money tomorrow. So I already know it, because wait till you see my buys. You can kind of see what's the NASDAQ stock futures, S&P. These futures can change instantly. And they're not always correct. So don't go by just that. Today, the futures opened at like negative, they were like negative 8 to 80 to 0.8 to 0.9%. Thing reversed within the first 2 hours. That's what I knew was going to, well, not new. That's what I was betting on was going to happen, and that's where I made my good buy-ins. And so you have to look at this. This is the way you got to go through it. If you want to make good entries, on good stocks that are down, that the market's forgotten about, that aren't affected by the fact that the market's down. That's like cash money every time. Every time. It's the bull in the corner that's getting beat up because of all the bears in the center of the ring. Okay, that's somehow related. That's what you want to find. You want to find the bull in the corner that's getting beat up for no reason. And the way you do that is the company that says, hey, we're going to make a lot of money. And everybody else is like, man, your sector is terrible. Or the market is terrible for today. And these plays, I will say, usually take 1 to 2 months. Because, and this is my caveat to it. I'm going to show you some examples here. Here's your earnings. I'm out. I'm done. I ain't holding into earnings. This thing is already, look at this chart. Look at this chart. Boom! Like freaking rocket launcher. I ain't gonna hold this earnings. Crazy? I ain't holding it. I ain't holding it. And you can actually see exactly why I ain't holding it. This is a brilliant play, and I won't say anything different. But I've watched the stock. Actually, you can see right here, this little tick right here. That's one of my buys. That's one of my sells. And then it runs, because I'm not buying that close. I made my money on it. I was like, well, okay, we'll see what happens. And then, of course, there's another one of my buys. My next sell. Okay. And here's my buy today. So I bought it under where it popped on earnings day because they raised guidance, for the next quarter. I've bought it under where I bought it the same day. This is genius, And so, I'm a novice. Don't get me. I just like this stuff. I like buying stuff and selling stuff. This is what I do, just for fun. This is kind of like, well, it's not for fun. This is for money. But but this is just what I'm doing. It's one way to play it. The stock is good. The stock is hot. The stock is, forgotten about. The stock raises earnings, their guidance for the next quarter. Boom! What is the move on that? Well, this is just how to show you. Let's see here. What's the move on that? We close on the day here. Okay, well, 5% poop. Whatever. Some people are like, 5%, whatever. But if you had $50,000, $100,000, $200,000 in there, that's a lot of money. If it went the other way, that's a lot of money to lose. But this is how to win bigly, and I said it, bigly and surely on strong bets. You have to wait till the market forgets. And the market will forget. You just have to figure out what it is. Because most of the people have lots of money in the market, huge amounts of money in the market. The second one little blip of indecision or danger comes in the market, you're going to get huge sell-offs. And that's the time to buy. You got to wait. Patience. There's 20 days between here. Okay? But I'm patient on this because I know. So I built a list of winners based on revenue and earnings, revenues and guidance beats. Okay, and then wait. This thing tanked off huge. Boom! Like that was the time to buy in. I don't know. I wasn't paying attention there. If you want to notice, the end of day here, is pretty darn close. Oh wait, it's to the penny of the end of the day of the downside here. Okay, this is clear buy. Only reason I'm buying lower is because I was at work. Okay. And I really wasn't going to set a moving buy order on the 50 EMA. But as you can see, that would be freaking boss as well. But here's the point. Find a stock that's strong. They've already told you they told you right here it's strong. They already said, hey, we're going to beat. And they're not 100% right. But if it's strong, they're usually pretty smart. So, I mean, talk about a hammer. That's a freaking hammer candle. But anyways, you buy in, you wait for that moment when the market was extremely tankish in the morning. I waited until the market started to correct a little bit. That's when my buy came in. Because it was already, when it was down here, the whole market was tanking. So I bought in a little bit, waited until it kind of came back a little bit, bought in. This thing probably, it could tank. This thing could tank. Don't get me wrong, this thing could tank. But if I'm looking at this chart right, this looks like a consolidation period while the 8 EMA and the 20 DMA come into the 50 DMA and then are going to bounce off of it. I mean, that's where I'm at. But this could be wrong. Hey, I could have sold already today and made some money. Doesn't matter. But my bet is that their earnings, which is a ways away, May 8th, you got a month and a quarter before the earnings. This thing may tank off a little bit or whatever. They already raised guidance. At this point, people said this is what it's worth. As soon as they raised guidance, they said, hey, this is probably what it's worth. So you buy it, and then you buy it. So, and that's a long period of time, so a lot of stuff can happen. The whole semiconductor industry could crash. But unfortunately, or fortunately for me, I don't believe. I mean, this whole entire sector. I mean, they're like number 2 in out of 170 sectors or something like that. That's crazy. That's one. Next one, STM. Same deal. Look, right here. They didn't. Now I don't know if they exactly said they were going to raise guidance or beat guidance, but in their conference call, they basically said that they were doubling their revenue by the end of 2017. Doubling. Okay. That's pretty close for the raise to me. And that was right here on the right after earnings. It was like boom, 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 shot up, stock dipped, came back in, hit. Here's my buy. I should have sold up here, but I was kind of like, yeah, it might break, and I held it. I doubled down here, sold up here, made cash money. People argued that I was selling it here. People argued that I sold it here. I sold it within a quarter percent of the top. Okay, I don't want to hear it. Get out of here. But anyways, so then we got another hammer coming in here. And the reason I'm buying in is you have a super hard resistance point right here. 1, 2, 3, 4 days that hit it. 5 that popped over it. 6 that came back in and then went above it. Very hard resistance point. But today is a bad market day, and this thing is a bullish hammer. Not really a hammer. It kind of is a hammer. Hammers in the middle of the charts aren't that great. But the point is, you buy it down here, which is where I bought it. So on this trade, I'm already plus, point and a quarter, point and 3/4, whatever. But this thing's gonna rip. There's no way it doesn't rip. So, well, it depends on total market. Like I said, you gotta go to the strategy. Total market, sector, and then local. But the point being, they're gonna be raised out. Here is the all-time sickness. the all-time sickness. If you want to see the all-time sickness when it comes to this strategy, it's right here. And when I was trading this, people were like, what the heck is that stock? Yeah, this stock is this stock has entered official beast mode. Okay, and that's all that can be said. Right here is what I'm tracking this thing for a long time. Right here, boom, raised guidance. I even got the freaking URL right there. It is. Go look. Raised guidance on the boom. This is the best. This is the absolute best. The earnings report isn't until another 20 days. They're saying they're gonna beat. Anytime a company comes out 20 days before earnings and says, "Hey, we are gonna beat," pay attention. Okay, they are foreshadowing. They are, telegraphing the stock's movement. The only reason the main reason the company does this is so that insiders can buy the crap out of it and not get, the SEC on an Spanish Inquisition. They're like, hey, we're gonna be really bad. So all the insiders just like gobble it up like crazy. Like, hey, cash money, here it is. I mean, it's a game that they play, and you gotta learn the game. I mean, this thing has gone way, 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 way further than I ever thought it could be. I own this thing at 27, which I bought it like boom, like right when it dipped back down here. Okay. But this is such a good example of what I'm talking about. This stuff this is all over the place, and this is not a strategy you're going to see. This is a winning strategy that works almost all the time. In this case, the stock never came back. The idea is to wait for the market to forget about a stock. The stock is so hot in its sector that it's like the top in its sector. Nobody's forgotten about it. Okay, a companion, a sympathy play would be Claro, which I don't have it on the list here. I'll pull it up here. But that's what I'm saying. Like you go from you get a 26-30% move on a raised guidance and EPS beat. They're foreshadowing. Then they hit. Boom. What do you know? They beat. What do you know? They beat. And they beat hard. I raised guidance again. This thing is a rocket launcher. Just go watch a video of the space shuttle launching, and this is about it right here. And the good thing about this is it's not some spec play, where like AUPH or something like that, where the stock is on fire and like rocket launches up and they have no revenue. I'm not knocking the stock, but all I'm saying is there's a big difference between this rocket launcher and AOI. This rocket launcher has got a lot of beef behind it. So the point being is find stocks that raise guidance. Look every day for stocks that raise guidance and beat EPS or raise DPS. EPS for guidance and revenue beats. Top and bottom line beats, raise guidance. It's a cash money. And a lot of times, almost all the time, they come back at some point, and they usually come back on a major down day in the market like this. Well, let's just use ON for a best example. I mean, they usually come down on a bad beat on a bad market day or something like that. You usually can get it. So let's look at one other one. Exact. Oh, did I do it right? Yeah. Here we go. You notice on my charts, I always list beat and raise guidance outlook. Always. Key. Here you go. Perfect example. Beats. Raises guidance. Boom. Huge pop. Don't buy it on the friggin' pop. Just don't do it. If you're going to buy it on the pop, look for the Bollinger Band cut through and buy it on the Bollinger Band cut through. Wait for the stock to get forgotten about. Oh, what do you know? Oh my gosh. These people that were buying right here are geniuses. Geniuses. Wasn't me because I was playing other stuff. But the price is here. They say, hey, we're going to beat. The price goes up here. It comes right down to where they're at. Who doesn't buy that? They already said they're going to beat. This is how simple this is. This is how simple this is. But you always have to understand total market, sector, individual. Bad individual news comes out, kills the stock. Bad sector news comes out, it can push the stock down. Bad market news comes out, and no sector or no individual news comes out, that's when you buy. Because the whole market is pushing it down for it. And it's being pushed down because large mutual funds and then ETFs and stuff like that are selling off stocks, selling off shares that affect entire sectors that they aren't even really they're like parasitical in a sense. You know what I mean? They're driving the stock down for no reason. But you can bet that there is a hedge fund out there that when they see this stuff happen, they're like, hey, it's time to buy, because this is what big boys do. Okay? And so find a stock. I mean, you cannot find. I mean, this is class. I mean, I just pulled this thing up. Boom, 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 boom. What's this? Boom. Look back here. Hard line resistance up. Hard line resistance up. Breaks it. Hard line support. Classic. I don't even want to look at the percentage move on this. So I'm going to be sick. Oh, gosh. 13%. I'm sick. But anyways, the point. But here's the deal. Now it's not like I'm gonna buy it now because it's so hot. No, the time to buy was here because you knew what happened here, you knew what happened here, and you was waiting for it to come down here. You was waiting for it to come down there. So, and this is a spec stock. So always look. Go back to your areas. Look. Don't have this look on your face when the stock goes popping through the roof. Okay, or this look like, hey, why didn't I listen to that guy? That novice guy is pretty good. So I just had to throw that in there. But kind of, that's kind of the really, really, really good. I know this video's gone long, but this is just kind of describing out my strategy. Of course, you need to watch where the Bollinger Bands are at. You need to watch what the moving averages are doing. Okay. And if the stock is tanking through everything, I mean, if they raise guidance here and the stock is like trading down here, you might want to do a little more research. So, but find strong stocks. Usually strong stocks are beating EPS, raising guidance, and beating revs. And a lot of time, a day trader comes in, a huge amount of day traders that come in here and be like, I'm going to make money off this, and they make their 3 or 4 or 5% on this thing and get out, where they could have made 13% on a huge bet. A solid, huge bet. And, that's where you're going to get stuff like this. Shoot, I could have put quadruple down on this bet. And I'm probably going to make money. On this bet, it's a little risky thing because, again, it's pushed out on a really, really, really high resistance level. But I was smart enough to sell out on my previous position, buy in much lower, ride that hammer in the middle. It's above the resistance level. Tomorrow's probably going to be bullish. I mean, NASDAQ futures are up just a hair. You want to be able, it's good. It's solid. Worst I can do is break even. So, that's what you kind of want to look at. So just go look for that stuff. MU, I don't even want to click on this. Ah, gosh. Here's the deal. Here's one for you. I don't even want to click on this chart. But here's my buy. There's my sell. Ah, daggone it. I only made 7% or 7.5% on that. Come on. I could have made so much more. But I wasn't going to hold through some of the stuff that's coming up. But you got a huge pop here. See here, this wasn't an EPS beat. Well, actually, I don't know. You can go back and look. But the point being is, when you find stocks like this, when they say, hey, we're going to beat next quarter, they're already telling you they're going to win. You can't get more telegraphed than that. The key is not to buy the heavy pop. The key is to just sit and watch for a month and wait and see if the market forgets about it, and then wait for that random Trump tweet that I'm gonna blow up whoever, and the entire market tanks off, which has nothing to do with the sector that the stock is in. And then you just open a full position. All right, and you need to learn, and you got to play strong stocks. You cannot do this on crappy stocks. But crappy stocks don't generally, raise guidance and that kind of stuff. So you gotta learn that. But find strong stocks with strong sectors, raising guidance, raising EPS, beating, and then just like fading. All right. Good luck, guys. Just one of my strategies I used. I've never lost money on this strategy, and I played it for probably about 4 or 5 months. I'm still learning the nuances on it, and every sector, you have to look at the sectors. You have to look at what they're saying on guidance. You have to really do some research on why they're raising guidance. What do they think? Are they legit? Is the sector hot? What's going on with that? And then kind of see what the fade's going to be, and then find a good entry. Usually, good entries are where there's heavy consolidation periods prior. In this case, not really good consolidation period on this thing because it's been trading at like a 52-week high for like a ways, but you have huge dip down, huge wicks, and that means that sellers came in, but buyers came in right after them. So, and the huge wicks ended right about here. I mean, there's no better class. I mean, there's no better. What's the low here? Low 1463. Come on, 1 cent. Give it to me, right? What's the low today? 1465. Dang, God, 2 cents off. What was the low on the pop? 1458. Somewhere in there. So you got a pretty good idea that if the stock hits this price range, somebody's gonna buy it. Why is this saying Ford? No, it should not say that. Alright guys, that's my video on that little diddly. My little ditty, whatever. So, hopefully it helps. But if you're trying to figure out, like, how do I find something? How do I beat something? How do I win? Find those sites that post live stream on every guidance raise, and then look at those stocks. Good luck. I'm a novice. I know nothing.